Keeping calm when trading is somewhat important. If you can make logical and rash decisions when under pressure and time constraints, and especially when hard-earned trading cash is on the line. This week, we're revisiting one of our older profiled indicators. VP made a video of this one as well, and even lauded this as a better exit indicator, which was mentioned in the exit indicator playlist. So maybe consider this as a dual-purpose tool for your algorithm. We're looking at the Kalman filter from Rudolf Kalman in 1960. Yes, it's a bit older than most indicators we profile, but hey, what works, works. This indicator has some interesting history. Its use began in the aerospace industry, helping solve navigation and guidance problems calculated by old IBM 704 machines. Its use in the trading industry began in the 1990s, so it's got more recent and relevant applications. It also possesses a special quality. It has the ability to adapt to market conditions, meaning that it will change based on the volatility of the market, a huge advantage to us traders, and appears as a price overlay, color change, confirmation indicator. We'll take a look at this little gem on the Australian dollar against the United States dollar, however. We've brightened things up for better visibility. We'll begin here with this long signal after some protracted range-bound price action. Let's see how this boomer of an indicator does for us. Before we go any further, we wanted to stop for a moment and comment on price action. There was a strong retracement right after our entry. Let's take a closer look. First, let's identify our signal candle, which came in with an ATR of about 65. We're rounding for simplicity. That means our initial take profit is ATR times 1, or 65 pips, and our stop loss is ATR times 1.5, or about 98 pips. So at an entry point of 0.65126, or 0.6512, that would make our take profit level about 0.6577, and our stop loss about 0.6414. Given that price immediately reversed to the tune of 175 pips, you'd have been taken out of the trade either by your stop loss or possibly your baseline depending on its reactivity. Is this a problem for us? No, not really. Sure, you'd have been bounced out of the trade, but your risk was already a known factor, and you lost 98 pips, not 175. Chalk it up and move on by entering into a confirmation trade. While it was a bit of a bumpy ride up, you'd have scored plenty of profit with a closed first half trade and a healthy trail in the second half, which most likely would have closed your trade before the signal line. Now a short. That was a great trade. We were able to weather some flat areas for deeper profits before the exit. Nicely done. No way around that volatility and chop. No doubt you'd have been looking elsewhere during the month of March. Loser all the way. Let's hope for brighter skies with this short. Another difficult area. You may have been able to squeeze out the first half of the trade before price backed over itself. At least we got that strong bear candle out of the way before we got the long signal. Let's see what happens now. Well, still not easy for us, but we'd have picked up profits on the first half and the second half trail before the price went sideways again. It's all good though, because you're not trading with only one indicator, right? Alrighty, small trade there on a solid entry. Your stop loss would have taken you out before the signal, so it's all good. We've got a similar situation here. Possible profit on the first half and a trailed exit before price took off in the other direction. Let's see what this last trade has for us. Price started upwards and closed our first half in profit before that price reversal backed over our modified stop loss at our initial entry point. But remember what keeps us golden: half of something is better than all of nothing. Remember, we don't cherry pick easy charts all the time because we're trying to demonstrate real-life situations. Granted, we've had easier charts in the past, but we've got to give all of our children a chance to shine. It had some killer results in our testing, so be sure to check out the blog, which was updated, tweaked, and streamlined for your reading pleasure. and the fact that it makes for a decent exit indicator only sweetens the pot. It's available in the library at a deep discounted price of zip, so go get it. In fact, it's the first listing under the confirmation heading. The link is in the video's description. Natty frickin' boo-boo, you can't make us. No financial advice here because there is none. So don't ask, otherwise you'll get the cold shoulder. Besides, with the amount of resources including the course, blogs, videos, and other miscellaneous fodder we have available, you can do this. Now get grinding, there's money to be had, and it can be yours. Our only goal is to make you a better trader.